And where we left off last time, you were working on a Google Doc. You'd shared it amongst yourselves, and you were answering the questions within it. So that would be good. It would be good if you had finished that. It would be fantastic. Right, and the Google Doc answered these questions. Right. So it was this one. All right, so in your Google Doc, your team would have answered the questions, the functions and the features of money, what were they? It would have answered what barter was. It would have talked about what the double coincidence of wants is and how money solved that. And it would have answered the question, why does money need to be scarce? So that's where we were whenever it was last week, Wednesday last week. Now, I know a lot has gone under the bridge since then, I know. And we look to be moving back to online learning from tomorrow. So, and we will just cope with that. That will be fine. Right? No problem. Don't be worried. Now, I have got, I'll get a couple more from the back, some lovely pieces of paper for you. We're going to go old school. Pen and paper. So if you have a pen device or a pencil, you good? The pencil on the left side. Now, what I'd like you to do with your piece of paper, very simply, first of all, take it and a little bit origami-esque, fold it in half. All right, you can do this at home as well. Piece of paper, fold it in half, just like that. Not difficult, because that got something on it already. Right. Now, once you've got that piece of paper in half, as a review, on one side, on the left-hand side, you're going to write down as many as you can remember the functions of money. Now, there were 4 of them. All right, that gives you a clue from the outset. On the right-hand side, probably not a surprise to you because you can see it here on the board. On the right-hand side, you're going to be trying to remember as many as you can of the features of money. That will go down the right-hand side. Now, you've done this in a Google Doc. You've got the Google Doc. You've shared it with yourselves. So if you can't remember, you can look them up. But try and use the grey power first. And now I know you're looking at me, lots of grey power. Yeah? Try and use your brain first. If your brain isn't giving you the answers, your notes will give you the answers. If your notes isn't going to give you the answers, then they really need to. Then maybe Dr. Google would help. All right? So that's what you're going to do for about 2 or 3 minutes, starting now. As many as you can remember. There you go. Good wee activity just for a review. many as you can remember. Only use your notes, all right, as a prompt. Only use Google as a last-minute help. With learning practice, so you can then test yourself. Good. Show it to someone else. Say, test on these. Check through them themselves. Make sure they're right. And it doesn't take long. 5 minutes. Yes. With these sorts of concepts, you're most likely to get physical questions about them in the multiple choice exam paper. The context and understanding behind them is what you are then going to need to use when you're applying these theories to real-life decisions that people make. So when you start talking about why banks might increase or decrease the amount of money, have an effect based on the functions and features of money. Another 30 seconds or so. Also good doing it on paper because it takes you off your computer for a bit. Practicing writing. In case you're unaware, because you may not be at this point, you may not have double checked and looked at it. All right, paper 1 that you will sit is the multiple choice paper. All right, You'll have 45 minutes to answer that paper. There are 30 multiple choice questions in it. Paper 2, when you answer paper 2, that's 2 hours long of writing. All right, so that might be a challenge for some of us who aren't used to actually pen and paper writing, particularly for that period of time. So that's something to consider as we move forward, whether there are other ways possibly that we can access the exam. Because there are some learners who actually do those written exams actually on the computer as opposed to handwriting. Maybe we can look at that. Right, functions and features of money. Now, moving on, we should see this next step. So this leads into quite nicely the idea about central banks and commercial banks. Now, there's a little bit of language that we need to understand with this. All right? And it's unfortunate, but sometimes in some places they might use different words. Okay? And you just have to see those words and understand that they are the same word. So, for example, when we talk about commercial banks, some people will refer to them as retail banks. That's the banks you are probably familiar with. You may have gone into a bank. Anybody gone into a bank? Yeah, a couple of you. All right. You might know the banks here in Malaysia. Might have seen them as you walk past. Might have used their ATMs. You might know the banks in other countries. Is there a, I don't know, what Korean banks are there? Not sure. It's all right. I've listed here a whole group of banks. These are mainly American banks. Yeah. Some of the names you might have heard of before, they're all retail banks, essentially, commercial banks. In New Zealand, there's a few banks, but they're mainly owned by Australia. Here in Malaysia, I mean, how many are there? You can almost count them on two hands, the number of banks that there are. So you may not have actually seen all of the banks, but you may know them. There's one called CIMB. There's one called RHB. There's one called Maybank. I think it sounds quite cool, especially if it's not in the month of May. Or if you decide you're going to spend the money instead of banking it. Yeah, I may bank it. Then there is the Islamic banking network within Malaysia, and that's slightly different again. But what of these banks do we also have here in Malaysia? Which one? You see one that you recognize from around Malaysia? What do we think? One of those banks that's got more letters in its name than anything else. Okay. Yeah, it's Spec Brandon, right? And we find it. HSBC, well done. That one. So there are going to be some banks, some retail or commercial banks that span different countries. So although a lot of these are American banks, There are some that are international. As I said before, a lot of the banks in New Zealand are actually Australian banks. Yeah. So HSBC is a Hong Kong bank. Yeah. And in different parts of the world, when we were in China, we could have gone to the Hong Kong Savings Bank, but we didn't. Right? Okay. And if you're aware of a country called China, it's out there somewhere, very big. They also have some of the biggest retail banks in the world. It's not too surprising when you see the size of the country. However, there's another country not too far from New Zealand that also has some of the biggest banks in the world. Interestingly enough, it's Australia. Okay, so they are retail banks. They're the ones, the commercial banks that you can go into. Walk in the door, do banking with them. These ones are different. All right? So these ones tend to be known as central banks. Sometimes we call them reserve banks. It means the same thing. They're either called central banks or reserve banks. And if you look at these ones, again, you might be familiar, you might have heard of them in the news, you might have seen them, you might have driven past them, right? The Bank of Canada, the Bank of Japan, the Reserve Bank of Australia, there's that Reserve Bank title, the Reserve Bank of India, that one, the European Central Bank, all right? Whole lot of words, sometimes people just say ECB, the European Central Bank. That one there, not sure. That one's Britain, right? Yes. Right. What about Malaysia? Does Malaysia have a central bank? Do we know what it might be called? It does have bank in its title. Right. Quick bit of investigating. You are allowed to ask Dr. Google, what is the name of Malaysia's central bank? First person to get it, go. Well done. Well done, absolutely right. Beaten to the punch. Yes, what's it called? Well done. That's how we spell it. Yeah. Bank Negara. Now, these are not banks that you are physically going to be able to walk into. Right? If you were to try, there might be some people with guns at the door who say, no, go away. Yeah? Perhaps rather forcefully. Unless in America, apparently, they just let you in. Yeah? So, right. In Malaysia, it's called Bank Negara. But one of the cool things about some of these banks, and Bank Negara is one, is that they have also got what's called a museum. And you can go to that. And in the museum, they show you the history of the money of the country. They'll show you how the money is made. They'll go into all the detail about money in the country. There's all sorts of cool things there. And sometimes they have a little shop, and you can buy like little pens with money in it. We did. Right, we took the year 12s there last year, right before the lockdown. It was very close. All right, but it was great. It was really interesting. So if and when we aren't in the sort of the lockdown sort of situation, it might be something that interests you to find out the history of Malaysian money and how it has changed quite dramatically over time. Right? In these countries as well, they probably also have museums where you can go and see the history of the money. Right? They had one in China when we were there. They definitely have one in New Zealand. We took students there. That was quite exciting. Okay. Central banks aren't commercial banks. They're not going to be what you think. They're not going to be ones you can personally walk into. We're going to get to what they are in a minute. But first, let's have a bit of a look at what those banks do. So, what do you think banks actually do? All right, now this is just a scatter thought sort of exercise. Just as many things that you can think of that a bank does. Anything. What do you think? You walk in there, what can you do? What does a bank do? Go. Year 11s are just sat there mock exam, their multiple choice mock exam, so I've got yay marking. They're not able to sit there paper twos though because of the lockdown, so that's all going to have to be online. That's going to be a bit scary for them. Everything you can possibly think of that banks might do. Many things as you can think of. Work on. Okay. Yeah, they do. Is there anything else that they do? What else might they do? Are there any other things that they do? Okay, good. We've all got some good ideas. See what the rest of you come up with. Good. Okay. All right. Good. So who are banks' customers then? Are we the customers of banks? Is there anybody else who's a customer of a bank? What do you think? Say it again. Yes. Yeah. Pretty much any business. Right? So from the market stall at the side of the road to Coca-Cola and Amazon and all of those sorts of ginormous big businesses, they're also clients of banks, customers of a bank. So your bank account where you've got your savings is actually going to be probably quite small in comparison to some of these businesses that have maybe millions of dollars worth of dealings with banks. Maybe more than millions of dollars, tens of millions, who knows? Uncertain, perhaps, if you have a look at some of their accounts. Probably not allowed. So what could banks do? What else? I mean, yeah, they're saving you the money. Yeah. But they're going to do all of that, not only for you, the consumer, the individual, they're also going to do all of that for the businesses as well. So if you multiply all that amount of money, that's a lot of money that they're sitting on. You said that they give you loans. Yes, they loan money. Good. They help with this one. Banks can help you with investments, particularly if you're a business. They can also offer financial advice. You can go and talk to them about, oh, I've got all this money, we don't know what to do with it. What would be the best thing to do? Yeah? The peers will be very familiar with that idea, going into the bank saying, we've got all this money, what do we do? Yeah. They can also sell you something. And this is relatively new, and not all banks do this, I understand, but quite a lot of them do this, right? Mainly because it earns them a lot of money. And it begins, I'm going to sort out the mock exams, it begins with the letter I. It's a relatively long word. Banks sell you something beginning with the letter I. There's a letter M. What could they sell you? There's a letter S. Yes, well done. Some banks will actually offer insurance packages for you. Life, health, contents, whatever you need. Right? Banks have kind of evolved to be almost a one-stop shop for finances and financial advice. So some banks will offer to sell you insurance as well. Right? It is a business. They're actually out to make a profit. So if they can upsell you and sell you a more expensive product, they're going to. Yeah, that's going to be quite important that they do that. Because that's how they make their money. They're not in this for love. Right? They're not holding on to your money because they really like you. They're holding on to your money because they know that they are going to be able to make money off of your money. Okay? Right. Well done. That is exactly what banks do. So if we didn't have banks, who does all of that? Well, probably nobody. Or maybe some bad people, some naughty people. In the past, if you wanted to get a loan and you didn't go to a bank, you might go to somebody who wasn't very nice to give you the money. They might charge you huge amounts of interest, and then if you didn't pay, they might come and be rather cross with you. Commercial banks, retail banks, they're businesses that seek to make a profit. Right? So just as you've said, they try and loan money. They will have lots of different types of loans: personal loans, student loans, car loans, and some really big loans called mortgages, which is a very old-fashioned word. I don't know, the word mort is there, so you've got to make an assumption that there's the word death somewhere in there, right? Death gauge. But it's a loan about a house, potentially. It's a very, very big loan. In New Zealand, the banking rule with regards to mortgages is that the mortgages typically were about 4 times your annual salary. Yeah, that's around about what they were offering. So if your annual salary was $1 million a year, this quite clearly, yeah, then that would mean they would loan you up to $4 million for which you to buy a house. Now, of course, if they are loaning you money, it's not your money. You are allowed to use it, but you are expected to pay it back, usually with interest. So that's going to be how they start making profits. Right? Okay. That's a commercial bank. There are, as we said, lots of them. You don't need all of this, don't panic, okay? Why do we need banks? Because we need them to do the things that we just said. If we don't have those banks, then those things that we said that banks do, we're going to need to find other people to do them, or we're not going to be able to do them. Now, things at the bottom here. How would companies make and receive payments? Think about all the online transactions that go through banks. Well, if you don't have banks, how does that all work? Yeah. Where would a store have to put its sales revenue? Yeah, that's difficult. How would it pay for its new business premises if it can't get a loan? It'd have to go to, perhaps a set of bad person to borrow the money. And what happens to the costs of having to run a business? You might have to look after the money yourself. There's no banks. You might be having to save the money yourself in a little box, I don't know, under the mattress, buried in the backyard, wherever it is you put it. Yeah. Now, I am so old, that I can remember being paid in cash from my job. Every week, because we got paid weekly, you would go up, receive your little envelope with all of your notes and coins in it. The coins were a real pain, right? But you would get your notes and coins in your little envelope, yeah? Track down. Everybody's like a whole troop of lemmings, yeah? And they would all go to the bank, deposit the money in the bank. Can you imagine the business having to have all of that cash on site? Yeah. Then having to have the security for it. So they have to protect it, lock doors, safes, all of those sorts of things. Can you imagine some of the really big businesses that were paying cash to all of their employees? Because they were. Because that's how you did it. And then eventually it became, hey, why don't we just send it over the computer? Makes sense. Banks do all of that. And if we don't have banks for that, then we have to sort that out ourselves. Banks are businesses, so they also offer a form of employment. You can work for a bank. I know people who did work for banks. At one point in my life, I considered working for a bank. Not for very long. My mother convinced me otherwise. Yeah, but it was a possibility, yeah, at one point. All right. Those are commercial banks. And the point is it's now an application. So now you know what it is, definition. Now the application is what happens if we don't have them. Yeah? What job do they do that we would then have to figure out what to do? How impactful on businesses are they? Quite a lot, you would suggest. And that leads us quite nicely, I think, into this idea of a central bank. You remember that we said central banks were also known as reserve banks. It's going to be quite important at IB, not necessarily at IGCSE. But we also need to know the functions of a central bank. Now, it does get quite confusing because sometimes in some countries they will have, like, say, America, because America is quite big. So each state in America has its own central bank, and then they have a countrywide central bank. But a lot of other countries will just have one central bank. So let's have a look. We need to note down what it is that they do, what their functions are. So the first thing that they do, they are the people who issue the money. They're the ones with the printing presses. One of the reasons why they won't let you in. Yeah. Brandon goes in and steals some of the money and runs out the door. They don't want that. You can watch videos on YouTube, believe it or not, of printing presses printing real money. They exist. And the really interesting one is the American dollar ones. And you see them, massive big sheets of them, through the printer. And then it goes to the cutting machine and it cuts them all precisely into the... It is quite amazing to see. And they'll hold up a whole big sheet and it's just all the individual banknotes on it. They're the ones who issue it. They're in charge. They have to talk to the government about the design of it. We talked about that with regards to the counterfeiting. It's an argument. right? What imagery is on it? Is there a hologram? What it's made of? Is it made of paper? Is it made of plastic? Why? Do we still keep this coin, even though it costs us more to make the coin than it does that the coin's actually worth? They have to talk to the government about all of that, and that's one of their jobs. They have to sort that out. Now, point number 2, we're reaching the point where we're starting to see functions of the central bank that are going to become, that are very important right now, but increasingly so as time has gone on. The first one, it worded kind of awkwardly. It says, to ensure the stability of the banking system. They are the police of the banks. Right? If we have a bank set up and the bank isn't doing what it's supposed to be doing, then the Reserve Bank, the central bank, can go to that bank and say, naughty, this is what you need to do. Right? They can actually go through the bank's accounts and check everything, and you're doing the right thing, you're not. Yeah? The Reserve Bank, the central bank, has the legal authority on behalf of the government to do something called deregistering a bank. All right, you're now no longer legally allowed to be called a bank. Yeah, they can do all of that. They are also there to make sure that the banks don't collapse, because we don't want that. All right, you don't want to turn up one day with your bank card to get your money out your account, and the doors are shut, and the sign on the door says, "Sorry, we're broke." That's not what you want. Okay? They're there to make sure that doesn't happen. And again, there are YouTube videos, you can watch them, right, of banks that have collapsed. And you can, famous one is called Northern Rock, which does sound like kind of a rock concert. Yeah. Right? No, it's a bank, was a bank. Northern Rock collapsed. And there's a video that you can watch on YouTube of the news reporting of its collapse, and you see people queued all the way around the block, desperately trying to get into this bank to get their money back. But nothing. Sorry, not money. All right, so it's one of the jobs of the central bank to make sure that doesn't happen. It was something we were thinking about. We were worried about this. I don't know, Mr. Pearce, if you were worried about this. Right, but in the very first lockdown, all the way back in, March? Yeah, we were a little bit nervous, and we went to the ATM, and we withdrew a larger amount of money than we would normally do. Because we were a little concerned that maybe everybody would decide to do that, and the banks would run out of money. And then when one of the ATMs nearby us had a big sign on it that said out of order, we started to get a bit nervous about it again. But that sort of thing can happen. Can. All that has to happen is people have to panic and go and get their money out. So their job is to make sure that doesn't happen. So therefore, part of that is this. Job number 3. They are what's called a lender of last resort to commercial banks. You know that you used to see this quite a lot in buildings. You'd have like a fire alarm button, and there'd be like a glass sheet over it, and then there'd be a sign above it that says, "In case of emergency, break glass." You familiar with that? Yeah? Well, this is that same basic idea. If there is an emergency, these are the people who jump in to try and save it. Yeah? Okay. So if the bank is failing, these are the last people who are going to be able to give them money. And if they can't, or if they decide they don't want to, which is another option, then the bank will fail. Gone. Right? There's a German word for broken bank. You've actually heard it before, I imagine. Bankrupt, which literally means broken bank. Where the bank has lost its money. And point number 4 is not only banks that can get into, job number 4, get into financial trouble, but it's also the government. And again, this is what we're seeing around the world at the moment. These reserve banks are loaning money to governments in order to make sure the governments can keep operating. Now you think to yourself, surely that doesn't happen often. Well, yeah, it does. Right? If you are familiar with a country called America, it's out there somewhere, quite big. Well, not that long ago, the American government decided to give its small businesses and people some money. They decided to give them $2 trillion. 2 trillion. It's a 2 followed by far too many zeros. Only issue with that is they actually didn't have the money to do that. So they actually have to borrow that money to give the money. And one of the groups of people that they borrow the money from is the central bank. And at the same time, the central bank in America has been desperately giving money to these banks to keep them going. And then the government, and then them, and then the government, and then them. Yeah. And relatively recently, the US government has decided to give even more money into its economy. Yes, there's been arguments about it, and in the meantime, people have been rather silly and attacked things and all of that. Yeah. But that's going to be another large amount of money. And again, the US government does not have it. Doesn't. So again, it's going to have to borrow it. That's how it works at the moment. And you think to yourself, well, that's quite scary. And it is. But it's again one of those situations where the house is on fire, so you are not going to argue about the price of water. You're just going to put the fire out. And this is what we are seeing in America and Britain, Malaysia, everywhere. The governments are spending, they're doing everything they can, everything that's humanly possible to do. They're doing it to try to keep the fire from spreading. And job number 5, there it is. Now it's called monetary policy. The word money is hidden in there. We are going to look at monetary policy in a bit more detail, but we're only going to be looking at monetary policy in more detail when you are in, well, it'll be close to year 11 at that point. All right, so you don't need to worry too much about that, but it is one of their jobs that they do. And part of it is this idea here, which says setting interest rates. Right, so when you borrow money from the bank, you have to pay it back. You have to pay it back with interest. Well, part of the decision that the bank has with regards to setting that interest rate is they take it a cue from the central bank. The central bank says we want interest rates to be higher. And so the commercial bank says, okay. Right. Central bank says we want interest rates to be lower. So the commercial bank says, okay. I wonder how it works. Right. Now I can do a wee visual picture for you. No, so but before I do that, those are the 5 main tasks of the central bank. Now again, this is a process where it's an identification, right, and a little bit of an application. So again, multiple choice question. You can see it asking you about the functions of a central bank. You can see that. Okay. You can also see some short response questions asking you about the functions of the central bank. When we deal with monetary policy, which is a little bit later down the track, then we're going to deal with this a lot more. So this understanding we are then going to come back to later in the course when we're dealing with something called macroeconomics. And we will be analyzing how all of this works in the context of an entire economy and some of the flow-on effects and some advantages and disadvantages, and do we think the government should do that and shouldn't do this and all of that. That's how that works. Right? So we need that from an understanding point of view. We need it from a multiple choice question point of view, and we're going to need it in an application point of view a little bit further down the track. Right, so let's take a bank as an example. Let's do HSBC because we saw that in the imagery before. All right, there it is. And look at my fantastic artistic skills. There's Brandon. Here you are. Yeah. Hold on. That's more you. Big smile. Yeah. Now let's imagine Brandon has some money. He's got $100. Woohoo! Well done. So he puts his $100 into the bank. That's a saving, otherwise known as a deposit. So then HSBC now has $100. But they're not making any money off that. It's sitting in their account. So along comes Mr. Pierce. Here he is. All right. And he wants to borrow some money. He needs $80. He borrows $80 from the bank. Yeah. He, of course, is going to have to pay that back and have to repay with interest. And if Brandon wants his money back, they have to repay him with interest as well. But that's only 80 of the 100, so the HSBC still have $20 left. Well, again, it's not making them any money, just sitting in their account, so they want to do something with it. So here is central bank, which we're going to call Bank Negara. So what the HSBC bank can do is they can take that $20 and there it is. Oops. They can deposit it there. They can hold that $20 in reserve and then deposit that $20 in the reserve bank. Yeah, hence the name. But then, of course, they're going to want to earn interest off that. So they can make some money. So they're making money here and they're making money here. They may have also charged Mr. Pierce some fees for his advice that he's asked for. You know, late fees if he doesn't pay the loan back in time. Yeah. All right. So they have deposited that $20 in reserve into the reserve bank. Now the reserve bank, they're the ones who set this interest rate. So if they want HSBC to put more money in there, they can just increase that interest rate. And HSBC go, oh, hey, we can earn more money by putting money in there. So they do. Right. Now, sometimes Brandon might want his money back. So he's going to go to HSBC and say, can I have my money back, please? But HSBC don't have it because they've loaned it here and they've deposited it there. They don't have it. Oh dear. Right, so instead what they do is they're going to borrow from Bank Negara. They might borrow, Brandon only wants $50, so they're going to borrow $50 from Bank Negara. It's called a settlement. Right. And in order to cover that, they have to repay, again, with interest. And it is Bank Negara who set this interest rate. So 2 interest rates, one here, one here. If Bank Negara want to punish banks for borrowing money, they can simply increase the interest rate. We don't want you to borrow money, we want you to save the money. But if Bank Negara instead want more money in the economy, they can decrease that interest rate and decrease that interest rate. And that means that the bank has less incentive to deposit money with the central bank, because they're making less off of it. And they've got more incentive to borrow from the central bank, because it's cheaper to do so. And they will do all of that and go, okay, let's loan more money. Now remember, these banks here are dealing with potentially millions and millions of dollars all day, every day. And that money then goes to here. So they are dealing with millions and millions of dollars all day, every day. And they are also the people who print the money. So that's an awful lot of money sitting around in these banks. Now, yes, today it's all in the computer. It isn't actually physically money like it used to be, with armored trucks going up and down and around. Yeah? Not that anymore. It's all digitally transferred. Right? Which makes it simpler, but also there's more room for people to hack them. There's more, computer programming stuff that needs to happen, and, all of that sort of stuff. And it needs to be secure and all of that. Yeah. So that's what they're going to do. So they have control over a huge amount of money in the economy. They can influence the level of interest rates. They can influence how much money Mr. Piers gets to borrow. They can influence how much Brandon is likely to earn by saving his money. And by doing so, this bank, the central bank, can affect the entire economy. So when we have a situation like we do at the moment, yeah, the central bank says, oh dear, we can help, right? And so they will lower interest rates here, lower interest rates here, and just say spend as much as you can. Now let's crank the printing presses up. Let's print more money, because the house is on fire and we're not going to haggle over the price of water. We're just going to do it and, worry about the value of money a little bit later, because now it's not as scarce as it once was. Okay. So that's a bit of a leap there, but it's a bit of an explainer as to how the central bank does what it does. Right. We okay with that? Yeah. Now, a lot of that you're not necessarily going to need to apply until we start looking at some of the macroeconomic concepts, which is later. But identifying the functions of a central bank is what you need to know now. All right. So, last little bit for today. Some of you very familiar with this idea, called a stock market. What's another name for a stock market? Anybody know? Sometimes called a share market. The word stock and the word share are going to mean the same thing in this context. So stock exchange, stock market, share market all mean the same thing. Now, unfortunately, stock markets, the stock exchange, have been around for over 100 years. People have been doing trading with stocks and shares. And because some of those stock markets, some of the really old ones in Europe, right, that's a long, long time ago in a galaxy far, far away, right? They had a slightly different level of English language to what we do now. So one additional word that we need to be aware of is this one, right? And it means stock market. Yeah? Bours, I don't know. However you want to pronounce that, I don't care. But if you see it in an exam, you immediately have to think stock market. Yeah, that's what it is. What they do is these sorts of things. They grab these bits of paper, right? They're called shares or stocks, and they are part of the ownership of a business. Just a small fraction of it. Businesses figured this out hundreds of years ago. They worked out that if they wanted to raise money in order to expand their business, they could sell part of the ownership of their business to other people. And those people would be able to make a return on that investment, potentially in the future, and maybe also by selling those shares, make another return. So if you've been keeping up with the news of late, you'll be familiar with this company. Tesla Motors. That has become quite a large company. So much so that the CEO of Tesla Motors, a gentleman called Elon Musk, right, over this entire period of time, the last year or so, he has earned so much money that he is officially now the wealthiest person in the history of the world. He has just passed, not just, by a very small margin, right, Jeff Bezos. So Elon Musk is now the wealthiest man in the world, right, which is quite scary, to be perfectly fair. He's a bit unusual, Mr. Musk. All right, now, this is in the old days, it was a physical piece of paper, and it was signed by the CEO, and you would deliver it by a courier, and you had it, and right? Nowadays, it's all electronic again. It's just zeros and ones in your computer. So anybody can trade now. And we even have a CCA here at the school where I teach you about stock market trading and what it all does and how it all works, and we go through some things, yeah? And the marketing department is going to use me for that, for the open day. We're going to run a live session about the stock market during one of the open days for people who are coming in to look at the school. The idea is that you are able to buy part of the ownership of the business. If you are wanting to buy part of Tesla Motors or Amazon or Apple, you need a fair bit of money because their shares are very expensive. Very. And that's one share. Very expensive. There are other shares that aren't so expensive that you could buy should you wish. Go for it if that's something that appeals to you. Now, one piece of advice without going into all the psychology of it, if you are thinking about investing in the stock market, don't invest money that you can't afford to lose. It's kind of like gambling. Yeah? So if you've got the choice between buying your groceries and investing in the stock market, buy your groceries. Yeah? That's one big rule I have. Okay? Now, it's not to say people don't do the reverse, and they do. There are people who mortgage their house to invest in the stock market. No, don't do that. That's dangerous. Yeah? There are people who borrow huge amounts of money to invest in the stock market. The problem being is that if they lose, then not only do they lose the money that they've invested, but it's also somebody else's money. They then need to repay it with interest. So their losses can be much bigger than their initial investment that there was, you know? And that's why some people can get into real trouble on the stock market if they're not careful. Nowadays, of course, the stock market is looking at electronic currencies, and we've discussed those, right? The bitcoins, etc. Yes, that will probably happen eventually too, right? Where those sorts of currencies will appear there. What is it that it does? The stock market does all of this trading of shares, and a lot of it is about creating confidence. Businesses are able to gain what's called investment. They're able to expand. So if Nexus wanted to expand and create another Nexus in Indonesia, it might need the money to do so. So it might list the brand on the stock market in order to get the money. So the school we worked at in Thailand, the overall parent company, listed on the stock market because it was buying schools around the world. Okay? And it was using the stock market, selling shares, in order to raise the capital to buy the new schools. Right? Eventually, someone came along and bought the whole lot, and then did what's called delisting, taking it off the stock market, and they had complete control of the ownership of the entire parent company of schools, right? Which would be the equivalent of Taylor's, which covers all of the Taylor's group, right? Being bought out by one person, which is quite significant. They're able to raise what's called share capital, which is just the money for the investment. So the stock market enables this to happen. There is another word that sometimes comes up in your exams, and you will see it in the news, and it's 3 little letters. It's called IPO. All right, what that means is something called an initial public offering. That means our company wasn't on the stock market before, now it is. So it's their first listing on the stock market. And usually the first listing is when you get the biggest growth, usually. The stock market, initial public offering. The stock market is very much like gambling. And it's like, you know, the games you used to play where you'd whisper a sentence in somebody's ear, and then they'd whisper it to somebody else, and they'd whisper it to somebody else, and then at the end, the sentence would be completely different from the one at the start. You've seen those games? Yes? Okay. All right. That's what the stock market is like. All it takes is someone to go, and all of a sudden, what? Sell, buy. It is that crazy. Yeah. To give you an example, a very recent example, this guy, Elon Musk, went online and told people to buy shares in a company called Sprint because he liked the company. Sure enough, what happened was everybody went online and bought shares in this company called Sprint, and the share price of Sprint went whoosh, like that. The only problem was it was the wrong company. Right? It was right? He hadn't explained which company it was. He just said the word Sprint, and it turns out there are several companies called Sprint on the stock market, and that all picked the wrong one. Yeah, so that's quite remarkable that that sort of thing can happen. Of course, there's another person whose name starts with Donald, who tended to tweet when he was allowed, not anymore, right? And all he would do is just send out a tweet about a business he didn't like, and the share price would go boom, like that. Okay, so it is very quick, and it is quite frightening. Okay, we used to have students who would invest in the stock market at school, and they would turn up to school, and they would come and they would show me their portfolio, and they would have lost thousands of dollars that day. All right? Oh no, I've just gained another $1,000. It is quite frightening. We had a kid at school who borrowed 40,000 New Zealand dollars to invest in the stock market, borrowed. Right, so he would have had to have repaid it. And he was making 1,000 here and losing 1,000 here and making 1,000 here and losing, all the time. He ended up going on to become a stock trader in Europe. Right, that's now his job. But yeah, he's not a particularly nice chap. Let's just say that. Yeah. Right. To do that sort of job, you need to be quite ruthless. You need to really know what you're doing, to have all the fingers on the buzzers, to know all the information that there is to know, and to know all the little shortcuts that there are. It is also, according to health people, what are they, doctors? That's them, right? One of the most stressful jobs in the world, outside of things like Alaskan crab fishing, right? And high school teaching, right? One of the most stressful jobs that you can possibly have is a stock market trader. Because all of a sudden, bam, something happens. Yeah? And if you've seen videos of the stock floor, when something happens and everybody is panicking and there's paper being thrown in the air and everybody's running and these people are on their phone and these people are shouting and these people are waving and these people are shouting and these people are on their phone, and it is chaos. And people do that day in, day out, all the time. And it is one of those jobs where if you get there early, you might get some information that the others don't have. If you stay later, you might get information the others don't have. So these are people who tend to work every single hour that there is, right? And that's their job, right? So it is considered one of the most difficult jobs. All right, ladies and gentlemen, we're going to stop there. You've done a heck of a good amount today. Now, please do review functions and features of money. Quite important. Banks, commercial banks, what do they do? Central banks, what do they do? Those are the key things, the key takeaways that we need to get from this lesson today. We are obviously going to be going into lockdown, so from here on out, it's going to be a bit more difficult. We're going to do it through the virtual. So you're going to need to keep up, attend the lessons, all of those sorts of things, the meets. I'll do my best with internet and everything else as well to do the meets live. Try and record the sessions, try and post them up to you so you can go back through and check. Work through the Google site. It's got a whole lot of worksheets and all sorts of video clips and everything in it as well. Right? Where we're taking this next is we're now starting to look at decisions that are being made by households. So these are households who make decisions about spending money, saving money, investing in the stock market. Why do they make those decisions? How do they make them? What determines those decisions? Okay, we're going to look at the decisions that households make with regards to jobs that they have. Why did they pick that particular job over this particular job? Yeah. Okay. I mean, you will all know this, that the average number of jobs somebody has in their lifetime at the moment is around 15. All right, which is quite a lot. That the days when people had one job for life tend to be over. All right, I had about 5 jobs before I graduated from university, at least 5. All right. So since then, I've done a whole lot more. Yeah, and that's how you will now be working. Right? And in the future, we're going to look at what work will look like and whether you will be digitally learning, right? Digitally working, whether you're going to be in an office, whether you're going to be at home doing it all online. All of those sorts of things are now much more possible and much more likely, potentially. Yeah. All right, so pack yourselves away. I'll put the video link up. Blue stuff for your hands, pink stuff for the desks. Otherwise, as we say in the land of my birth, which means goodbye for now. Thank you, team.